Morning Call. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Tuesday morning. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Rima and Mangalam. Guys, hi, good morning.
Hi, good morning. It's a Tuesday morning, and we've packed in such a punch in the last couple of days with the kind of rally that we've had.
Well, 600 points worth. It's just like the market's galloping.
Astonishing,
ahead,
right?
You have the boxing bouts, etc. Yesterday was the heavyweight bout. It started with HDFC Twins, and then there was a smooth transition. Reliance from nowhere came, ended at the high point of trade, and ended up being the biggest contributor. And then it was ITC, which led the FMCG index to the high point as well. So imagine the top four performers doing extremely well, and that accounted for most of the gains yesterday.
Well, I'm just wondering whether it's the regular regulated boxing or is it WWF or something.
For today, it is likely to be street boxing because the FIs are absent, the US markets.
Absolutely. Well, let's just on that note tell you what you need to know as we begin another trading session. So, let me just start with that point, which is the fact that the Nifty has added 600 points in the last 4 sessions. Basically from last Monday. Tuesday is when the market made all-time high. We hit 19,900. And we are at 19,350 almost, right? So it's just been an absolutely very, very fast-paced market on the Nifty. And this is, by the way, in a way, happened at a time when maybe at the margin gains, the pace of gains, at least on the mid-cap side, are slowing down. Action is starting to shift to large caps. More on that a little later. But just a quick look at the US market. It was a shortened session in the US. Cash markets closed earlier. There is, of course, a holiday today. U.S. markets are not trading because of the 4th of July holiday. And the changes were not very much. The S&P was flat. It was up about 0.12. NASDAQ was up a little bit more, 0.25% or so. The dollar index is round about just under the 103 odd level. So not very much in a way to really take away. One data point, and I think this is the second data point, which has kind of come in weaker. First was core PCE. And yesterday we got the ISM manufacturing data out of the U.S., which came in its weakest level since May of 2020. But guess what? Markets ignored it. Well, because the understanding is that most of the inflation is coming from services, not from manufacturing. So now we will wait for the services ISM data, which is only going to come out on Thursday. On Friday, later this week, the end of the week, we get the jobs data, which of course is going to be the big one. The labor market in the US has been too tight by all accounts, and that basically leaves no slack across the board. So that's the data out of the US. But in terms of real takeaways from US markets and Qs, etc., not very much. Okay, so the Nifty has now continued its upward journey, 600 points. But it's also yesterday hit the upper end of the rising channel. This is the level we put out yesterday, 19,315. We've actually ended slightly above this level. So I would say, I think the opening is not, the GIFT Nifty now is not indicating a big open here or there. But so 19,315 in that sense becomes at the upper end of the rising channel becomes important. If the market gallops ahead, that becomes a bit of a support, which the Nifty should not enter into once again. And if the market runs away, we're basically looking at least 19,500 to begin with. So let's see if after a very sharp-paced move, no US markets later today, we get a bit of a consolidative kind of session. On the downside, the trailing reversal stop that you could keep is roughly just under 19,000 actually, but rounded off that to 19,000. But that is also 300 points away, 320 points away. But that's the closest that you could find based on hourly indicators, etc. That's been the pace of the move that we've had. On the Bank Nifty, we closed, the moves sort of picked up pace a little bit after we closed above the previous high. That was 44,500. 44,499 to be precise. And we saw that yesterday, right? The Bank Nifty outperformed the Nifty and what it did. Upside target could be about 46,000. And the supports, basically, there's a big gap which we saw between day before yesterday and yesterday. 44,800 to 44,900. The high of day before yesterday and the low of yesterday, which is 44,900. That's basically the zone around where you should look for supports, trailing reversal stops, etc. Things are looking good. The only thing I think which is a bit of an impediment, which perhaps is a case against the market doing better, is that it has done too well in a very, very short time span. Otherwise, not really very much out there which is perhaps a big negative or anything. But sometimes you need to pay attention, especially if you're trading. You need to be cognizant of the fact that markets don't go. They do go one way. It's been a one-way kind of a move, but after a fair bit of rally, perhaps there is a bit of a pause, a consolidation, sideways kind of market, which isn't a bad thing at all. Rima.
Just to put that scorching rally that we've seen over the last 4 days in context, I pulled up the performance, the gains over the last 4 trading sessions, and let's pull them up for you on your screen, and you would have those 600 points right there. The Nifty has marched on to 19,300 in a very short span. Asia this morning is a bit on the back foot. So Nikkei has retreated nearly 1% after hitting those 33-year highs yesterday. But some markets like Hang Seng are bucking the trend. The street is going to be awaiting the interest rate decision from the Reserve Bank of Australia. It's anticipated. The Economist poll seem to suggest that we are likely to see a 25 basis points rate hike. Inflows continue in the market. So yesterday we had the FIs pumping in nearly 2,000 crore, while the DII sold about 337 crore. And in Qs today, the domestic demand appears to be quite strong. We will talk about the provisional updates that have come in from Bajaj Finance, from DMart. They seem to suggest that the domestic demand, the economy, the Indian economy is firing. But today it's also the Fin Nifty expiry. The last couple of Fin Nifty expiries have seen a surge in the last 1 hour in the banking pack. So watch out for that. Senco IPO, which is India's largest gold retailer in eastern India, that opens up for subscription today, and HMA Agro will be listing.
Yes, we will watch out for all those things. But, I'm just talking about the consolidation. You have so many positions added on the long side in the F&O space itself that now one believes that maybe there could be some sort of consolidation, largely because of the overweight that people are on the long side. I'm just looking at yesterday's purchase as well. The FIs bought about 3,000 long contracts, covered about 1,900 short odd contracts, and as a result of which their long positions now are at 70%. At the start of the series, it was 66%, which again was the highest that we've seen in the last few series. So as a result of which it's increased. Secondly, ahead of the Fin Nifty expiry, we've seen more call selling than put selling. So that's telling you on the way up, there may be some resistance for the Fin Nifty itself. The India VIX, despite the rally that we've seen so far, the India VIX has priced in some sort of complacency. It's still sub 12. Yesterday, after a lull, it saw a bit of a spike. So that's something that we need to take note of. And the put call ratio has been above that 1.4 mark, 1.5 closer to that mark, indicating that we are overstretched. So what is the data on the option side for the Nifty suggesting? 19,300 call and 19,300 put, both are active. And those who are selling both of them are playing for a range of 19,150 to 19,450 on the Nifty itself. For the Fin Nifty, it closed at 20,253 yesterday. The highest open interest on the call side is 20,400 and the highest open interest on the put side is 20,200. So there is strong support expected. On the way up, do we find resistance or not is the big question, because it's two big constituents will be reacting today. It'll be Bajaj Fin and Bajaj Finserv. Bajaj Finance gave a great strong first quarter update. So to that extent, we'll see a bit of an up move there. And from the F&O standpoint, watch out for IDFC First Bank, because that is likely to open around, sharply lower, because the swap ratio has valued the company at a 14% discount to IDFC Limited. And then because the FIIs are absent today or likely to be absent because of no Qs coming in from the US, mid-cap and small-cap index is likely to perform better. And we'll also watch out for positions being built on names like Titan, GCPL, Dabur, Marico, Kalyan Jewelers, because before the result season, we have the pre-quarter updates coming in, and those are the stocks I'll be watching out for.
All right. Well, there's a fair bit, Mangalam. Thanks very much for that. Before we go any further, let's quickly tell you what's lined up here in the first half hour of the show. We get you updates from markets around the globe. Cameron Brand of EPFR Global will be tracking flows for us. We discuss the global setup with him. Our research team will get you CNBC-TV18's list of top 10 stocks for the day. And at 8:30 this morning, we will have Mehrabun Irani talking to us about what he likes, the themes that he would like to bet on from here on.
On equities, Surendra Goyal of Citi says the recent rally has been premised on relative resilience of growth or earnings and driven by FII flows. Valuations have re-rated, but still just 0.5 standard deviation above the 10-year mean and a 70% premium relative to the MSCI emerging market. For June 2024, he sees limited upside after the 14% rally since March this year and suggests buying the dips. He also adds, going forward, the key to watch will be El Nino and state election outcomes. FII flows have been volatile and difficult to call on the portfolio front. they've removed Tata Steel from their preferred list of stocks and moved metals to an underweight from neutral. The key overweight sectors are financials, autos, and PSU utilities and defense, while the key underweight sectors are consumer discretionary, IT services, and metals.
Okay, well, that's Surendra Goyal of Citi. Let's get you some money market views as well. On the rupee, we have Abhishek Goenka of IFA Global who says that despite the one-year forward yield dropping to 1.7%, the rupee continues to remain steady. FPI flows into equities have kept the dollar INR under pressure. RBI's tolerance for rupee appreciation seems limited so as to maintain competitiveness. Yesterday, for a brief while, the dollar INR broke 81.8 to a dollar, but the pair ran into aggressive bids around those levels. He expects the rupee to trade between 81.6 to 82.9 to a dollar range over the coming few weeks.
On the bonds, Ajay Magnolia of JM Financial says yields remain steady in a relatively light economic calendar. FOMC minutes are due for release later in the week. India's manufacturing PMI paints a robust picture, and crude prices continue to be stable and in our favor. In the absence of any major triggers, yields are expected to remain steady and likely trade in a band of 7.09 to 7.14%.
All right, and we have a lot of stock-specific action to track today as well. We'll get you all of them in just a bit in our special Top 10 segment. We're talking about Bajaj Finance, Reliance Industries, Hero MotoCorp, Biocon, Aurobindo Pharma, IDFC and IDFC First Bank. And also watch out for Avenue Supermarts. All those stocks on our radar on the back of positive news flow. We'll see Vodafone Idea and Bharti Airtel stocks which are on the back foot or likely to open in the red.
Okay, well, that's basically what's lined up here in terms of stocks, and there is lots of stuff today. It's a news-heavy day, this Tuesday. Well, Cameron Brand is Director of Research at EPFR Global, and he's joining us now to take some questions. Cameron, great to have you with us here. Thank you very much for your time. Before I come to you, Cameron, for our viewers and for you, I want to just put out, just a few headlines from the newspaper, the Financial Times, recent headlines from the Financial Times. I just want to sort of read them out to you and then ask you for your reaction. Look at this. This is basically the China plus one theme, but for portfolio flows, right? The first headline, China is, quote-unquote, cancelled for many foreign investors. I mean, these are not our stories. These are stories from the Financial Times quoting lots of foreign investors out of China and Asia. Clients rush for Asia investment products that exclude China. Number 3, pension funds recoiling from China, says Dutch asset manager, one of the largest Dutch asset managers, actually. And, of course, a few others. So, Cameron, I just want to ask you, what do you make of all of this? This is a topic we've discussed in the past, but is this picking up steam? Are you hearing sort of, things like this from investors that you speak with? And is it showing up in flows yet?
The sort of general narrative from the investor side is definitely more cautious than it has been. But China remains very hard to ignore, especially given the widespread expectation, and I would include myself in this, that the stimulus measures that we're already seeing starting to be introduced will pick up in the second half of the year. So even though China is viewed much more cautiously in the wake of the very aggressive COVID containment lockdown last year, it remains too tempting for foreign investors to completely avoid. And we saw, another $2 billion go into dedicated China equity funds last week.
So maybe this theme has been overdone a little bit, maybe in the near term. But the larger fact is that China is of the MSCI Emerging Market Index, China makes up 30%, or 31%, around about there. The idea, or what the bet seems to be, is that maybe that weight comes off a little bit, maybe a few percentage points. And since this has got hundreds of billions of dollars benchmarked to it, it's a lot of money to be distributed to other markets if that were to happen. So that seems to be the broad thinking. Agree with it, Cameron?
Yeah, I do. And we've been seeing that in the fund flows, even though China equity funds frequently end up at the top of the weekly flow table in pure dollar terms. Investors are looking at Asia much more broadly. And indeed, in this past week, dedicated India equity funds had their biggest weekly inflow since the first quarter of 2015.
What were the inflows into India dedicated funds? You said they're the highest level since Q1 of FY15.
Yep, they were a little over 500 million.
Okay, and what has been the average, say, over the last couple of months, to put it in perspective?
The average has been steadily creeping up. Before interest in India really took off, we were sort of looking around the 50 to 80 million a week. But in recent weeks, it's moved steadily up. Even before this week, we were starting to see fairly routine inflows of 250, 300 million. So interest is definitely building. And India is really being seen as a very credible alternative to China exposure at the moment.
That's almost double of the average, 250 to 300 turning into 500. Cameron, the other day we spoke with Mark Mobius and he suggested that there's a possibility that South Korea will be moved from the emerging market category to the developed market category. If that were to happen, the 12% weight that South Korea currently enjoys, those funds free up. Do you think that would be an India positive, a further impetus for India?
It would, though I would hasten to say that having been sort of watching this for a long time, I wouldn't rush to bet on Korea getting that upgrade. It continues to be a difficult environment for foreign investors. And though many nominal reforms have been made, actual practice remains inimical to getting the upgrade. However, were it to happen, yes, I think India would certainly be a major beneficiary. The timing would be good because, as we've been discussing, investors are looking to put chips on markets other than China.
Cameron, just to go back to the India dedicated flows, is this mostly through the ETF? Is this $500 million largely ETF or non-ETF?
It's biased towards ETF, but certainly not completely. And, I'm assuming that the point of your question is, are we seeing more long-term money heading towards India? And I think the answer there is yes.
No, I mean, the other sort of thing that I wanted to, because ETF money also chases momentum, right?
Right.
So, and we're not lacking for momentum here in India, Cameron. As we were just discussing, right? I mean, the Nifty just galloping away. So you get momentum, a lot of momentum money, which can come in very quickly. So is bulk of this 500 million that?
I would say over 50% is, but the narrative around India at the moment is very positive in a long-term sense. A lot of focus on the growth rates that you're achieving, the demographic dividend that people hope you will be able to cash in on. And investors were, I think, a little cautious to jump on this bandwagon. So, the money that's coming in lately isn't just sort of a rush of hot money to chase the indexes higher.
Cameron, very quickly, you said the inflows into India via the dedicated funds has practically doubled in the last couple of months. Even the rest of the emerging markets have done well. Year-to-date, Kospi is up 16%, Nikkei is up 28%, Taiwan is up 20%. Don't want to get into specific numbers about these individual, but have the rest of the emerging markets also seen inflows doubling? Or has India managed to garner a disproportionate share?
India's the acceleration of flows into the India funds stands out. Some of the other markets have seen strong support, but it's not grown in the way that we've seen the flows into India funds.
All right. Thanks a lot, Cameron, for joining in and giving us your views. The Indians out here will be extremely happy to know that the funds are accelerating, and more importantly, these are long-term funds and not something that will just, fly away as the momentum turns on the other side. We take a short break. On the other side, we get you our list of top stocks.
Welcome back. You're watching Bazaar Morning Call, and it's time now to tell you about the top stocks that you need to have on your radar. This morning, our research team is standing by with our list. Top of that is Abhishek on Bajaj Finance. Abhishek?
Well, Bajaj Finance gave out its quarterly business update in which their new loans is up 34% YOY and about 30.8% sequentially. So the sequential growth of 30.8% is perhaps at a 7-quarter high. Customer base is up 21% YOY and about 5.5% sequentially. AUM growth on a YY basis is at 14-quarter high and 16-quarter high with respect to quarter-on-quarter growth rate that you are seeing. So AUM is up 32.4% YY and about 9.2% sequentially. Calculation shows that the average ticket size is up just 9.5% YY and about 3.5% sequentially. Deposit momentum is pretty strong, growing at 11.8% quarter-on-quarter. The liquidity in the balance sheet is strong. It's up 7.2% sequentially, and the cross-sell rate that they have is one of the best in last 6 quarters, coming in at 8.3%. So a good business update coming in from Bajaj Finance. Back to you.
All right, Abhishek, thanks very much for that. Well, Reliance, Vodafone Idea, Bharti, Hero MotoCorp, so many stocks which are going to be in focus, and the one-stop shop Rima is here to take us through all of that. Rima?
Well, so once again, Reliance Jio is trying to tap into the device market. They've launched a new phone. It's a 4G phone. It's an internet-enabled phone. It's called Jio Bharat Phone. It's priced at 999 rupees. Now, India's subscriber base is more than 1,000 million, more than a billion, subscribers. In fact, inching more than 1.1 billion subscribers. In that, there are 250 million subscribers, which is 20 to 25% of the overall market, who who currently use a feature phone. They do not have internet on their phone. They only have access to 2G. What Jio is trying to do is trying to tap those users, lure them to convert to 4G, and they've priced the device at a price which is attractive for even those feature phone users, because right now for them the smartphone device is very expensive. Hence they're finding it difficult to transition from their feature phone to the existing smartphone. This phone, which is that internet-enabled Jio Bharat phone, kind of sits right in the middle of the existing 2G feature phones and the expensive 4G smartphones which are available. Now, this is negative news for competition, because currently MK tells us that Vodafone Idea has about 100 million 2G subscribers. Bharti Airtel has about 111 million subscribers. According to MK, even if 40% of these 2G subscribers shift, it could hurt their top line by nearly 10% and their EBITDA by double digits, a 19% EBITDA impact for Vodafone Idea, and for Bharti Airtel's India business, 11%, on a consolidated basis, 6%. But the bigger risk is, the street was anticipating some tariff increase. If Reliance Jio is getting aggressive, will this push back expectations of a potential tariff increase? And this will hurt the sentiment more.
All right, Rima, thanks a lot for that. And the standard disclosure, as always, the disclaimer is up for you on the screen itself. But, let's talk about top of the pyramid after the bottom of the pyramid that we've spoken about. Hero MotoCorp, a 2.29 lakh bike coming in from Harley.
Yes, so this is the first bike which they have launched with their partnership with Harley. Remember, Hero and Harley has a partnership. So this is the first co-produced bike that they have launched. It's called X440. It's priced at 2.29 lakh, but if you go to the top variant, it could go as high as 2.7 lakh. The bookings will start today. Now, Nomura says they're quite positively surprised by the attractive pricing. It may not be disruptive, but it's definitely very attractive. It's only at a 15 to 20% premium to the existing Royal Enfield Classic and the Meteor 350cc. So yes, it's priced at a premium, but considering that Harley is an aspirational brand, there would be consumers who are willing to transition to Hero MotoCorp. They will await the India launch of the Bajaj Triumph bikes, which will take place tomorrow. So positive news for Hero MotoCorp. There will be bike enthusiasts who will find the price attractive, but it could be negative news for Royal Enfield, because currently I think they have close to about a 90% market share in this premium category.
The other point is that Triumph pricing will be revealed tomorrow. Right? As you said. And can they really price their 400cc bike at a premium to Harley? So if it is lower than Harley, it gets closer to Royal Enfield, right? I mean, a little lower than Harley.
My only concern is what happens to the core Harley consumer who buys it for the premium. I mean, a lot of times what happens is, and this happens in the consumer pricing and branding as well, if you're a premium product, you try to price it attractively, you alienate the premium customers. It's like Louis Vuitton bags going on a bit of a sale. The reason why they don't go on sale is because they believe that the original customer will then feel cheated.
Absolutely. Well, it's an interesting space, and all eyes will be on the listed name. Of course, Hero, but more importantly, Aisha will be in focus, because that's the player with a 90% market share in those 350cc plus bikes. Well, more on that later. Let's get in Ekta now. Biocon and Aurobindo Pharma are in focus. Ekta, tell us more.
And welcome back.
Welcome back.
Thanks for that. Well, yes, for Biocon, the news is definitely positive. They've launched a Adalimumab, which is basically the biosimilar. It's the largest drug in the global pharma market size $18 billion. They've launched that particular biosimilar in the US markets. It is used for arthritis and skin disorders. It is going to be branded as Hulio in the US. And this is their fourth biosimilar launch in the US markets after Pegfilgrastim, Trastuzumab, Insulin Glargine. How much can they make in it? Estimates are that Biocon can probably make $170 to $180 million in FY24. Remember that Amgen has launched the drug in Jan of 2023. Coherus has also announced their intent to launch with an 85% cut to the innovator prices. So how that plays out is something that the street will watch out for, but definitely a feather in the cap for Biocon, considering it is their fourth launch when it comes to biosimilars in the US, though it's probably highly anticipated and highly factored into Biocon stock price as well. Aurobindo, the group entity of the company, has entered into an agreement with Viatris for $48 million. This is in relation to transfer from Viatris charges for certain marketing and manufacturing related authorizations, and the agreement also contemplates participation in the supply chain, sharing of net economic benefits by Viatris as well. The company is expected to update on further arrangement progresses. We are very scant on details with regards to this. This is all that we've updated the exchanges with. So we are just working with this. Expect these stocks to probably be in the green.
All right, Ekta, you're back, and so are the pharmaceutical stocks in focus. So that's about our daily dose of pharma. But let's go across to Abhishek once again. Abhishek, last evening we got that news on IDFC First Bank merger finally.
Well, finally, the news has come that, IDFC Limited will be merged with IDFC Bank. So, IDFC First Bank to offer 155 shares of IDFC Bank for every 100 shares that you hold in IDFC Limited. So, the deal price as per calculation indicates a 16% premium that IDFC First Bank is paying for IDFC Limited based on yesterday's closing price. So the merger will lead to simplification of the corporate structure that is there in the IDFC group, especially with respect to IDFC FSCL, IDFC Limited and IDFC First Bank. So that will consolidate them into a single entity and will help streamline the regulatory compliance that is there over there. So the scheme is subject to receipt of applicable approvals from shareholders and creditors, also stock exchanges, CCI, NCLT, RBI and SEBI. This could also mean that the standalone entity's book value could rise by 4.9% as per the press release, and the scheme will take anywhere around 9 to 12 months to get implemented. Back to you.
Okay, well, thanks very much. That's going to be one of the stocks of the day, IDFC and IDFC First Bank. Finally, long-awaited merger coming through, at least the swap ratio out. We have Mr. V. Vaidyanathan, Managing Director and CEO of IDFC First Bank, joining us to take that conversation forward in terms of what the future plans will look like for the bank from here out. Well, let's come back and talk about the FMCG space now. We have business updates, first quarter, pre-quarterly updates coming through, and this time Avenue Supermarts reported. Magalam, how does it look?
Well, it looks good because, the standalone revenue of the company grew 18% year on year. And this is no feeble base. This was the first normalized base for the company at the same time last year. So 18% growth year on year is a positive. What's even more positive is that there's been 12% revenue growth quarter on quarter. They've added only 3 stores during the quarter, but first quarter usually they don't add as many stores. The fourth quarter, which is a store addition heavy quarter for them. And year on year, the store addition has been 11.2%. So revenue growth of 18% and 11.2% store addition implies that there has been positive SSSG or same-store sales growth to the tune of 5 to 6%. And that would be a positive for DMart because now this implies that consumer sentiment is turning. And with prices coming down, despite that revenue moving higher, it is a positive. So important to track the product mix and margin improvement in their reported numbers. And the stock also, after a correction, it's trading at a steep discount to its 5-year average valuations.
Okay, thank you for that. And with that, it's a wrap on our top stocks to watch. Here's a quick recap. Stocks with positive news flow are, you've got Reliance Industries, you've got Bajaj Finance, Hero MotoCorp, Biocon, Aurobindo Pharma, IDFC, IDFC First Bank, and Avenue Supermarts. Stocks with negative news flow are the telecom stocks, Vodafone Idea and Bharti Airtel.
All right, so those are the top stocks to watch out for with news backing them. But a bunch of brokerage notes this morning as well. Ekta has poured through a few of them to tell us which are the ones in focus. Ekta.
Thanks for that. Well, I'll start with the financials. Jeffrey has written on M&M Finance. They have a hold rating, target price of 270 rupees. According to them, for Q1 FY24, the loans and disbursements grew 28% each year on year, which was a tad better than estimates. Citi has written on Bank of Baroda, buy. They've raised their target price to 245. They are confident that the bank can deliver credit growth of 14 to 15% and net interest margins of 3.3%. Morgan Stanley, 2 notes coming in from them. First on Gujarat Gas, they have an overweight rating, target price of 559 rupees. The government has raised the import duty on propane imports for industrial use. They believe that Gujarat Gas should see an 8% increase in ASP due to this price change. And Morgan Stanley has written on Navin Fluoro, overweight rating, target price 5186. They believe the capital raise will be used for new specialty high-value projects. Investors have historically viewed accelerated capex investments favorably.
All right. Aja, thank you very much for that. That's the calls coming through, which we will focus on with Mehrbon Irani, who will be joining us in just a bit. He, of course, is coming up after this quick commercial break, markets and themes that he'd like to bet on. We also have the management of Mahindra Logistics, who will be joining in to talk about the demand trends in that space. Stay tuned. Both those conversations coming up in 2 minutes.
Welcome back. You're watching us here on Bazaar Morning Call. In case you've just tuned in, the overnight cues were mildly positive in the US. Today, the US markets are shut. And the forward indicator for our markets, the GIFT Nifty, is indicating a mild positive start as well. A bunch of stocks in focus. And we have with us Mehrbon Irani to tell us about his likes and dislikes in the market as well. Mehrbon, we had a lot of Q1 updates coming in. Bajaj twins stood out, Bajaj Finance. And DMart as well saw a growth after a long time, 18% revenue growth year on year. Between these two, how would you play? Because valuation's not particularly cheap for either of them.
I think you answered the question itself and quite well. I would have said the same thing, and I'm saying the same thing, that DMart numbers quite good. But at the present level, do I go and put in some more money? So the incremental money part, I don't think I will be in a hurry to go and buy into it. I think DMart has been a great company, most efficient, very efficiently managed. But I have had reservations on the valuations for the last over 3 years, and I was ready to put in my bet and say that this stock is not going to give you money. But as a shareholder, telling somebody to go and sell it off just because it's expensive was not very easy. So this is a stock which has underperformed in a big way for the last 3 years just because of its valuations. And even at the present level, despite the numbers which seemingly look good, I would not be in a hurry to go and put in more money. As far as Bajaj Finance goes, more or less the same rationale. I think the good part is the deposit traction has come back. The loan growth has been very good. This is again a great managed company. I think one of the possibly the best in the NBFC sector, and that is why it is having rich valuations. But again, in a market which has gone up one way, and even the frontline indices are going up right now, thanks to the HDFC's twins, Reliance and ITC yesterday. I think I would not put in incremental money again into a stock like Bajaj Finance. From a trading angle, yes, it can possibly notch up 3, 4, 5% gains. I'm not ruling it out. The numbers were good. It makes you feel that things are coming back into fine fettle as far as Bajaj Finance goes. Even M&M Finance numbers were good. But considering the monsoon aspect, which I'm still not very clear, are we going to have a good monsoon or not? I would not like to depend on too many names like an M&M Finance, which also depends a lot on rural income. So all the three names, good numbers, the review numbers are good. We are going to see good results coming from them certainly, but not in a hurry to go and put in incremental money in any of these three names.
Mehrbon, I mean, if you are viewer with IDFC First Bank shares. What is the recommendation now? The swap ratio has been announced in favor of IDFC compared to where prices left off yesterday. You hold on?
Well, yesterday the way the share price moved up ahead of the announcement was a clear indication that whatever is going to happen is going to be in favor of IDFC shareholders. And if you were an IDFC shareholder who had sold off, saying that the news is going to come, but is not coming, just a few days away, you would have felt very stupid yesterday, at least late evening when you announced the ratio. The ratio is clearly in favor of IDFC Limited. Now the point is IDFC first. Is it a well-managed bank? I think one of the best CEOs it is having in the banking industry, no doubt about it. But the stock at 80-81, I think is certainly not very cheap, at least not for the moment. And with the ratio now coming in favor of IDFC Limited right now, I think the point is, are we going to see IDFC Limited share price go up further, or are we going to see IDFC Bank shed some weight? It's possible that it could be the latter. I'm not ruling it out, because 80-81 itself for the time being looks a little bit expensive in terms of valuation. Whether this could be a 100 rupee stock or 120 rupee stock in the days to come, I'm not ruling it out. But at 81, if this ratio was not announced, and you would have asked me, Prashant, the question is IDFC Bank should be bought at 81, I would have said, okay, it's gone up a little bit too much. Let us shed 10-15% weight and then possibly go and buy into it. So with this ratio coming in favor of IDFC Limited, certainly there could be some selling coming in IDFC first. That's my view. Or otherwise, you could have an IDFC Limited go further. So either which way, IDFC Bank is a stock which, if I was holding the share and if I was looking at it from a very short-term angle, I would be in a hurry to possibly come out of it and look at buying opportunities maybe 8-10-15% lower from the present price, despite it being one of the better managed banks with a decent CEO in place.
Merabun, the other one in terms of news flow is, Hero and the model they've introduced, the Harley bike they've introduced, and the pricing, which is very competitive to Royal Enfield bikes. What does it mean? I mean, Royal Enfield is a leader in the 350cc plus category with 90% share, so they've got the most to lose. Tomorrow we will get pricing from Triumph, Bajaj's Triumph as well. That's a 400cc bike. If you own Eicher, what's your sense? I mean, would you give it a relook? Would you reassess, or be happy holding it?
Yeah, I would be happy holding it, and I would not be too much affected by what Hero is doing right now. I think, again, if I was managing a 2,000 crore fund, which I'm not, I think, and if I had to put in money into a couple of the stocks, would Eicher Motors qualify? Again, not from the incremental money angle, but if I was holding it, I would not be too disappointed or too worried about what Hero is doing. Coming to Hero, I think this is a stock which possibly needs a few more triggers for the stock to perform. I think this has been a rank underperformer in this segment. Now, coming back to the overall two-wheeler segment, if you ask me, I would say that even the performance which came for the month of June, I think was very mixed. And the disappointment was in the entry-level segment, which normally you see a lot of traction happening over there. It was rather muted this time. So I don't think I would be too excited about what Hero is doing, despite the fact that, as I mentioned, that somewhere relatively the stock looks undervalued in the two-wheeler segment. And as far as Eicher goes, well, it is Eicher. It has always commanded a premium valuation. So this news is certainly not going to prompt me to go and sell into Eicher. But I would take a relook overall, because again, this is something in which I am a little concerned. I mentioned that the last time I was on your channel, I mentioned about the white goods sector, that I see demand coming off a little bit. And the same thing possibly could happen as far as the two-wheeler segment goes. Again, if it could be further accentuated by the fact that if we don't have a good monsoon coming. So on the whole, not too much of expectation from this sector, and the Hero announcement is not going to make me go and sell into Eicher Motors. Coming back to your question.
All right, Merabun, always a pleasure speaking with you. Thank you for joining in with your perspective on a whole host of stocks. But is the logistics sector on our radar an important barometer of the way the economy and demand situation is panning out? So Mahindra Logistics joins in now. They expect the logistics industry, of course, to grow at around 14% compounded growth to be almost 30 trillion rupees by 2026. Ram Praveen Swaminathan, who's the MD and CEO of the company, joins in now. Thanks a lot, Ram, for joining in. That's about 2026, the projection that you guys have given for the industry. But let's talk about the here and now. You saw some weakness coming by in the second half of the previous financial year. Has that turned in the first quarter so far, or have we still seen those weak momentum parameters sustain?
I think overall Q1's been a lot like Q4, so it's not really changed in any material way. Obviously, play within segments, auto and manufacturing is stronger. We are continuing to see some softness in e-commerce. So the put and take, I think, is pretty much overall the same. Momentum's not moved either way in Q1.
What's the expected softness in the e-commerce space in the current quarter, the quarter gone by, and how much does it contribute to your overall volumes?
So e-commerce is probably for us is around 18 to 20% of our third-party logistics business, probably around 15% overall. And I think for it's growth has been slower, and we are obviously seeing consolidation in terms of the first mile and the mid mile, where warehousing space and assets etc. are being consolidated because they're probably being overcapacity. And that's kind of the impact which we are seeing. And as I said earlier, slower growth than we expected.
Last time we spoke, I think you mentioned, Mr. Swaminathan, that this consolidation, perhaps by the time we enter the festive season, things would start to look a lot better, and you'd be over with this utilization of excess capacity which came up during COVID, after COVID, because e-com boomed. Do you maintain that view?
Yes, I think from what we're hearing, there are some green shoots clearly in terms of work which we are seeing with our customers. So we are an enterprise B2B company, so we essentially work. Our customers are marketplaces which end customers buy from, and we are seeing some green shoots in terms of expansions at different categories. So I'm still optimistic that by festive this year we should definitely see utilizations going up, if not new build-outs happening.
You yourself are doing a lot of things. You had suggested that the Dubai hub, the charter operations that start in the first quarter itself. Just wanted to know whether it started. And you said that would help you accelerate volumes in the second quarter and the third quarter. How has that panned out?
Moving well. We launched in the first quarter, and I think we've seen some positive traction. That's obviously cross-border logistics driven. So I think in the second half of the year, as we said earlier, in the second half of the year, we should see that adding to the momentum in our kind of cross-border logistics business. But it's going well. We are seeing some positive momentum with clients and customers, despite global softness. We are seeing some good momentum.
Any projections for FY24 in terms of growth and margins? I know you've given us a long-term, a 5-year projection of 10,000 crore in terms of top line. But what about this year? What could the numbers look like?
Demand this year is going to, right now we are probably expecting, it's a bit hard to predict. We have both organic and inorganic elements in our financials. I think the organic part of the business, I think we do expect, moderate growth in that business. And we are expecting consolidation of margins. That's something which we're working on. The inorganic businesses, we are, especially the Express acquisition, that's been a bit of a carry in Q4. It'll probably be a carry for some time as we kind of invest in expanding that network. But as I said earlier, we're very optimistic about the long-term potential of the business. Overall, I think we do expect moderate growth this year. I don't think it's going to be kind of a year of significant growth for us. The way the markets are, the focus clearly is on margin optimization and improvement.
All right. You spoke about the inorganic part of the business. The acquisitions of Rivigo as well as Meru. Just wanted to understand what are Meru's operational metrics looking like right now? Has it broken even? How far is it from the blended margins that you do right now? And Rivigo, when does that become a bit positive?
The Meru acquisition's gone really well. We acquired the business last year, and compared to a standalone loss of around 2021, 22 crores in FY 21-22. Last year, the consolidated business, all parts of our mobility business actually saw a significant reduction in losses, and losses were only around 9 crores. We are headed well. I think this year we should see that turnaround really happen, good momentum in terms of demand and synergies as well, which is what's playing up there. I think the Rivigo acquisition, we are expecting that the business will be EBITDA positive in the second half of the year. We have doing most of our integration work right now, as we had earlier mentioned. So second half of the year, we should actually see the business being EBITDA positive.
Okay. All right. We'll leave it there, Mr. Swaminathan. Appreciate you joining in. Good luck. And thanks very much for your time here on CNBC TV18. Well, let's focus back on markets. Anuj is here in the studios with a quick sense of how he is sensing the market and the pace of the move, Anuj, which has been just spectacular, right?
Morning, Prashant. Yesterday you joked about, when I said double engine, that, it should be triple engine. And I think the market listened to that. Reliance joined in the party yesterday, and there was delivery buying of nearly 1,000 crores in Reliance, 900 crores to be precise. The bank Nifty, of course, has been very strong, and IT, that saw some profit taking. But, yesterday was the first sign of euphoria in the broader market, and I put two numbers to that. If you look at the top traded stocks, 39 of them were in the green. I had to go to the 40th stock to spot the first red, and many of them were poor quality stocks, some of them poorest of poor quality stocks, which were rising 10% or above that. And 241 BSE stocks at new high. Keep an eye on that. The market's now overextended. Some consolidation perhaps should be healthy. Fin Nifty is expiry today, and the last 5 Tuesdays have been good for the market, and Fin Nifty in particular. And on most days from days low, we managed to gain at least 100 to 200 points on Fin Nifty by close. And I think that's been the really strong trend. But can we break that trend? Let's find out. And one last thing that I want to point out, since I had pointed this out 2 weeks back, that keep an eye on HDFC Bank. That could lead the market from here. I'm not surprised that you've seen the kind of rally that HDFC Bank has shown, about 9% in 12 days. In last 3 days alone, the delivery buying has been 7,500 crores in HDFC Bank. Now, two numbers to keep an eye on. One, HDFC Bank even now is at 10% discount to its own average multiples. And two, the FI buying, which has been happening here, has been reducing that ADR premium. When we spoke about this thesis, the ADR premium was 18%. Yesterday, the ADR premium has come down to 12%. So perhaps there's still room for about 8 to 10% more catch-up play in HDFC Bank from here on, and that may coincide with the merger record date. So because 3 or 4 large caps are doing well, the Nifty might still continue to do well. But in the broader market, clearly now there are some signs of euphoric moves.
All right, Anuj, fair points made. We will monitor those as we go along. Important to track the way it moves from here, the HDFC twins, the large players and the smaller players too. With that, we'll take a short break. On the other side, we have Mitesh Thakkar and Sudarshan Sukhani joining in to discuss the trading strategies. Welcome back. You're watching us here on Bazaar Morning Call. Some further weakness is what we're witnessing in the Asian indices. The Nikkei has actually moved to the low point of trade with a cut of almost 1%, and that means that we have seen a bit of a decline from the highs on Gift Nifty itself as well. Where do we go from here? Well, Mitesh Thakkar and Sudarshan Sukhani now join in. Mitesh, Sudarshan, good morning. Mitesh, coming to you first. This manic rally that we've seen, hopes for consolidation, are they just hopes, or, is there some case for consolidation now?
So, morning, Amit. I think the only a factor which could suggest a bit of slowing down or a pullback is the fact that the hourly charts are now in overbought situations. But looking at the other indicators and the expansion indicators, I think we would still maintain that if there is some kind of a pullback, it should be bought into. I think the market will most likely, with a certain amount of good probability favoring your outcome, will make newer highs and head towards 19,450, 19,500. So one, I've suggested trading the stop loss about 19,200 on the Nifty. These are spot levels for your long positions. Two, I think any declines to about 19,250, 245 would be the buying zone for me if somebody wants to buy a fresh or add onto the long positions. And I think eventually in the next couple of days, we should head towards 19,450, 500. So till 19,200 gets taken off, I'll maintain a relatively bullish bias.
Okay, and the Nifty is headed to levels of 19,450, 19,500. Mitesh, any stock... Sudarshan, your thoughts on the Nifty? Would you continue to stay long? Is it attractive to enter in? Because it's likely that we could have a flat opening this morning. So would you venture out and take a position on the index?
Good morning. See, a flat opening or an opening on any particular day doesn't affect the long-term trend of the market. So I think we'll just ignore what the kind of open we are going to get today. The Nifty is in a strong uptrend, and strong uptrends need to be bought repeatedly. Every dip in the Nifty remains a buying opportunity. The only key question is where you want to buy. For a short-term trader, obviously the dips will be small. For a positional trader, you can be patient and wait for a 200, 300 point dip in the Nifty. That will come. But let's talk about the short-term trades. Short-term traders should have a wide stop under 19,000. You must allow room for the Nifty to move up and down. It's quite possible that the markets may enter a consolidation as we speak for the next 2-3 days. So give it room to consolidate. Keep a stop under 19,000. If you find an intraday dip, go and buy the Nifty. But the Bank Nifty is a completely different story. After that big rally in the Bank Nifty, yesterday there were signs that it's already entering a correction. Now, that may not be true, that may happen or may not happen, but it's best to avoid the Bank Nifty and focus on the Nifty where buying is suggested.
All right, let's talk about individual stocks then. Mitesh, yesterday the heavyweights gained. Do you think they find mention in your list of stocks today as well?
I think I do have, one stock from the large cap side. Others are, slightly on the mid-cap segment, but I think broadly it's a market which is well distributed. So I think you can trade either of the stocks which you like, and I think most of the stocks are seeing breakouts getting successful. So I have a buy on Grasim with a stop at 1777 for targets of 1840. MGL is a buy with a stop at 1060 for targets of 1125. Metals were gaining some traction, so I have sale as a recommendation. Keep a stop below 86, look for targets of 91. And Bank of Baroda, the PSU banks did extremely well. Good breakouts in Canara Bank, BOB, etc. So BOB is a buy with a stop at 195 for targets of 210.
Sudarshan, your individual stock ideas?
Sure. See, SBI Cards is an intraday short. Short selling should be done only intraday. The stock has already broken down from a rising trend, and it suggests that lower levels are coming. So short with a stop of 871. The other three stocks are all for buying. Ramco Cements, after a big rally, has entered into a trading range. Now, trading range in bullish markets usually break on the upside. We'll assume that breakout will come on the upside. Buy it with a stop under 910. Similarly, Jubilant Foods has been moving up steadily. It's been a slow mover, but the trend is very clearly on the upside. Higher highs, higher lows. Jubilant Foods is a buy with a stop under 489. And finally, Hind Liver has been consolidating. Now, that's been an underperformer relatively, but the first signs of a breakout are now visible. So, Liver is a buying opportunity with a stop under 2650.
Okay, gentlemen, thank you very much for giving us an overview technically of the markets, the setup. Need to get into a break. On the other side, we'll have the pre-opening rates, and we'll also be joined by Balaji Subramaniam of IFL Securities to talk about the launch of the Jio Bharat phone by Reliance Jio. Stay tuned.
Welcome back. You're watching us here on Bazaar Morning Call. Some further weakness is what we're witnessing in the Asian indices. The Nikkei has actually moved to the low point of trade with a cut of almost 1%, and that means that we have seen a bit of a decline from the highs on GIFT Nifty itself as well. Where do we go from here? Well, Mitesh Thakkar and Sudarshan Sukhani now join in. Mitesh, Sudarshan, good morning. Mitesh, coming to you first. This manic rally that we've seen, hopes for consolidation, are they just hopes, or, is there some case for consolidation now?
So, morning, Amit. I think the only factor which could suggest a bit of slowing down or a pullback is the fact that the hourly charts are now in overbought situations. But looking at the other indicators and the expansion indicators, I think we would still maintain that if there is some kind of a pullback, it should be bought into. I think the market will most likely, with a certain amount of good probability favoring your outcome, will make newer highs and head towards 19,450, 19,500. So one, I've suggested trading the stop loss about 19,200 on the Nifty. These are spot levels for your long positions. Two, I think any declines to about 19,250, 245 would be the buying zone for me if somebody wants to buy a fresh or add onto the long positions. And I think eventually in the next couple of days, we should head towards 19,450, 500. So till 19,200 gets taken off, I'll maintain a relatively bullish bias.
Okay, and the Nifty is headed to levels of 19,450, 19,500. Mitesh, any stock... Sudarshan, your thoughts on the Nifty? Would you continue to stay long? Is it attractive to enter in? Because it's likely that we could have a flat opening this morning. So would you venture out and take a position on the index?
Good morning. See, a flat opening or an opening on any particular day doesn't affect the long-term trend of the market. So I think we'll just ignore what the kind of open we are going to get today. The Nifty is in a strong uptrend, and strong uptrends need to be bought repeatedly. Every dip in the Nifty remains a buying opportunity. The only key question is where you want to buy. For a short-term trader, obviously the dips will be small. For a positional trader, you can be patient and wait for a 200, 300 point dip in the Nifty. That will come. But let's talk about the short-term trades. Short-term traders should have a wide stop under 19,000. You must allow room for the Nifty to move up and down. It's quite possible that the markets may enter a consolidation as we speak for the next 2-3 days. So give it room to consolidate. Keep a stop under 19,000. If you find an intraday dip, go and buy the Nifty. But the Bank Nifty is a completely different story. After that big rally in the Bank Nifty, yesterday there were signs that it's already entering a correction. Now, that may not be true, that may happen or may not happen, but it's best to avoid the Bank Nifty and focus on the Nifty where buying is suggested.
All right, let's talk about individual stocks then. Mitesh, yesterday the heavyweights gained. Do you think they find mention in your list of stocks today as well?
I think I do have, one stock from the large cap side. Others are, slightly on the mid-cap segment, but I think broadly it's a market which is well distributed. So I think you can trade either of the stocks which you like, and I think most of the stocks are seeing breakouts getting successful. So I have a buy on Grasim with a stop at 1777 for targets of 1840. MGL is a buy with a stop at 1060 for targets of 1125. Metals were gaining some traction, so I have sale as a recommendation. Keep a stop below 86, look for targets of 91. And Bank of Baroda, the PSU banks did extremely well. Good breakouts in Canara Bank, BOB, etc. So BOB is a buy with a stop at 195 for targets of 210.
Sudarshan, your individual stock ideas?
Sure. See, SBI Cards is an intraday short. Short selling should be done only intraday. The stock has already broken down from a rising trend, and it suggests that lower levels are coming. So short with a stop of 871. The other three stocks are all for buying. Ramco Cements, after a big rally, has entered into a trading range. Now, trading range in bullish markets usually break on the upside. We'll assume that breakout will come on the upside. Buy it with a stop under 910. Similarly, Jubilant Foods has been moving up steadily. It's been a slow mover, but the trend is very clearly on the upside. Higher highs, higher lows. Jubilant Foods is a buy with a stop under 489. And finally, Hind Liver has been consolidating. Now, that's been an underperformer relatively, but the first signs of a breakout are now visible. So, Liver is a buying opportunity with a stop under 2650.
Okay, gentlemen, thank you very much for giving us an overview technically of the markets, the setup. Need to get into a break. On the other side, we'll have the pre-opening rates, and we'll also be joined by Balaji Subramaniam of IFL Securities to talk about the launch of the Jio Bharat phone by Reliance Jio. Stay tuned.
Welcome back. So we've got the pre-open, which is coming up on your screens. So just the very first rate, it's a little all over the place. Manoj Muralidharan is Vice President, Derivatives at Relegate Broking, joining in to take us through some more trading ideas from a futures and options perspective. Manoj, good morning. Good to have you with us here. Easy 100 points every day. It's too good to be true, but it is true so far. What would you do, Manoj?
Good morning, Prashant. Prashant, what you said is absolutely right, but then this usually happens, statistically, if you see out of 12 months, you at least get a 2 to 3 months when the market is trending. And then you have an 8 months when obviously option buying is a difficult thing to do for the next 8 months. Now, like you said, yes, even yesterday, the Nifty managed to add around 4%. So, Prashant, one good thing in July versus June is in July intra-month, if you see after the series started, the net positions in the Nifty did not cross a 1 crore. So the participation was a bit timid there. But now, July, as of yesterday, it has crossed 1.03 crore. So that's a good thing. If I'm not mistaken, we are seeing more participation from the retail or the so-called client as a sector. But then 19,300 strike call and put options are being sold yesterday, and I believe it's close to 150, 160 rupees on a premium. So that brings you into a range of 19,150 to 19,450. So Nifty might be consolidating in this 300 odd points for the next 2 days. So intraday, 19,300, if you get a dip closer to that, that's a good level to go long. And like you said, 100, 120 odd points on the upside, 19,400 to 450 might be the resistance.
Your individual trades, any stocks you like, Manoj?
Yeah, Prashant, I guess cement and oil and gas is where the money has poured in yesterday. So I believe that we might see follow-up buying. So ONGC at 162 becomes a good buy, 158 as a stop loss, and we expect a target close to 170 on that. Along with that, GAIL at 106, 107 is also a good buy. 103 should be the SL, and we're expecting a target close to 112 in the short term for GAIL.
All right, Manoj, thank you for joining in and giving us your views on the F&O stocks. But let's talk about the Momentumizer stock today. Sonal joins in with what's on her radar. Sonal.
Thank you so much for that. Well, Taneja Aerospace, that's the stock on my Momentumizer list because yesterday it surged with huge volumes. The stock was up 7% yesterday, and this year itself it has seen gains of around 60% and is at a 52-week high level as well. As I said, volumes were high, 2 times the average volumes that it trades on the BSE exchange as well. Now, the company, it is engaged in manufacturing of parts and components for the aviation industry, the parts of an aircraft, and also provides services related to airfield and maintenance. And we've been seeing this big boom in the aviation industry, Interglobe Aviation at a record high as well. So maybe it seems to be benefiting this ancillary company as well, which is into manufacturing of aircraft parts. And that's why the stock is on our radar.
Thank you very much for that. Let's talk about Reliance Jio, which unveiled India's cheapest internet-enabled phone yesterday. It's going to cost just 999 rupees, and even their monthly plan at 123 rupees for 28 days is 30% cheaper than what competition is currently offering. And plus, despite it being cheaper, it offers 7 times more data. The move is aimed at making internet accessible to more Indians. Balaji Subramaniam, Vice President at IIFL Securities, is now with us on the show. Balaji, I think the first goal will be for Reliance Jio to tap 100 million subscribers via this new device offering. Your thoughts on Reliance Jio and the impact on Bharti and Vodafone Idea, because they also have 100 million 2G subscribers.
Hello.
I can hear you, Balaji.
Hello.
We can hear you. Go ahead.
Here.
Can you hear me now? Okay, so we'll just try and reconnect. But Reliance Jio yesterday has taken another shot at the telecom device market. They've launched a new phone called Jio Bharat Phone. It's priced at 999 rupees. This will offer internet as well to the users. Currently, India has about 250-300 million feature phone users who do not have internet. So the idea is to get these feature phone users who do not have internet to migrate to the Jio Bharat Phone, because the device is attractively priced at 999 rupees, and plus the monthly outgo to recharge your phone is also not prohibitive, because they are pricing it at just 123 rupees for 28 days, which is much cheaper than what competition currently is. This move could hurt peers, particularly Vodafone Idea, because remember, Vodafone Idea is losing subscribers at the top end because they do not have a 5G offering. And now there is a risk that even their existing 100 million 2G subscribers could get impacted. The move could also hurt Bharti Airtel because they also have about 110 million 2G subscribers. So there is a risk that the existing 2G subscribers of Vodafone Idea and Bharti move to Reliance Jio's phone.
I believe we have patched that connection with Balaji once again. Balaji, okay, just a bit. We'll have to wait for a little bit longer. Maybe we need better connectivity. That's the whole point of so many players coming in and offering better products.
You know, while we patch that lineup, let me just quickly move from phones to bikes. And let's quickly put the... so Eicher will be should be in focus. And the view was really divided. Just to take off from what Rima highlighted in top 10. So Hero launched the Harley Davidson X440. Starting price is 2.29 lakh ex showroom. And to many, this is much more competitive as compared to what they thought pricing would be. Take a look at the Royal Enfield pricing. This is Classic 350 and Meteor 350. I mean, there are other models as well, Hunter, etc., the newest sort of variant which they've launched. 1.9 to 2.22, 2 to 2.17. I mean, basically the concern is that with Harley, which is considered around the world as perhaps the epitome of super biking, large bikes. I mean, coming at a very competitive price, very close to where Royal Enfield products are priced at, perhaps will give it a run for its money. Now, Bajaj Triumph is the other one which will unveil pricing tomorrow. We had the Bajaj management yesterday, and we kind of tried to push them about what they think of volumes, etc. And they did leave us that they are, I mean, this is not a target or anything, just let me be clear. They said the company will be geared to handle up to 10,000 units in the near term. That's basically what the Bajaj management told us. Bajaj Triumph sort of units in the near term. So we'll learn more about that. There's a launch in Pune and the pricing, etc. will be unveiled. We'll know that tomorrow afternoon. Competition. And Eicher is the undisputed leader, undisputed king. Royal Enfield has got 90% plus share in the 300, 350cc plus category. So we'll talk about this. Well, we also, by the way, will have the Harley-Davidson representative and the Hero MotoCorp representative join us to talk about the launch and what their aspirations are with the latest product launch which has come through. Okay, we'll have Balaji on telecom and the JioPhone in just a bit, but let's use the opportunity while we get that up to also get the 9-10 calls out of the way. Sudarshan and Mitesh are with us. Sudarshan, what do you have?
Well, I have Ramco Cement. Ramco Cement is a buy with a stop under 910.
Mitesh, what about you?
I'll go with the buy on Grasim, the stop at 1777, targets of 1840.
Okay, all right. Thanks very much, both of you. Coming back for a few more stocks in a bit, but let's go back to the other big story, right? IDFC and IDFC First Bank shine the spotlight on those two names once again. Abhishek is standing by with that. Abhishek.
Well, Prashant, the IDFC First Bank will offer about 155 shares of IDFC Bank for every 100 shares that you own in IDFC Limited. So, deal price indicates that this could be around 16% premium to IDFC's closing price of yesterday. So, the merger will lead to simplification of the corporate structure that is there in IDFC Group with respect to IDFC FSCL, IDFC Limited, as well as IDFC First Bank. So, this will help in consolidating all the entities into one single entity and streamline the regulatory compliance that they have. The scheme is subject to approval from various categories like shareholders and creditors, stock exchanges, CCI, NCLT, RBI, as well as SEBI. So the scheme will take around 9 to 12 months to get implemented, and it could lead to a standalone book value of IDFC First Bank increase by 4.9%. Back to you.
Thank you for explaining that, and we will be joined by the management of IDFC First Bank, V. Vaidyanathan, at 9:30 a.m. So do tune in to that important interview. But meanwhile, we managed to connect with Balaji Subramaniam, Vice President at IIFL Securities, to talk about the telecom sector, the new launch by Reliance Jio in terms of the phone and the impact it could have on competition. So Balaji, take it away. Do you expect Jio Bharat phone to be a success? What could be the subscriber base it could garner and the impact on competition?
Hi, good morning. Thanks for having me on the show. So the way I look at it is that this phone is priced attractively, as is the tariff plan, because I think what Jio is trying to do it is probably trying to position this phone as something which is even below the Jio phone it launched a few years back. And especially since the 2G to 4G upgrade cycle has been delayed due to affordability constraints, and also considering the fact that the entry-level tariff plans have seen an increase in the last few months, I think what Jio is trying to attempt here is maybe, get a section of the market who probably don't want to pay somewhere around 155 or 179, depending on which plan of the incumbents you look at. So as far as the success is concerned, as in it's clear that the handset pricing and the plan pricing are quite attractive. But having said that, my sense is that subscribers, or rather 2G phone users of both Bharti and Voda, who are probably close to the fag end of their existing handsets lives, for them probably, this is a good option to move into. But for someone who has probably purchased a handset maybe 1 or 2 years back, for him probably he will probably not jump at this opportunity and upgrade to the new handset. Maybe he will wait till the handset life runs its course. So in a way, I think this plan is fairly attractive. And if you have to look at the number of subscribers which Jio can potentially garner and the impact for the others, I think it would also have to depend on a number of things, like how the user experience is, whether there are any overheating issues or OS hanging issues which one feels in the initial days of the launch. Because a lot of these things nowadays spread by word of mouth, and if the reviews are good, then I think this handset should do pretty well. But I think we'll have to probably watch out how all these aspects pan out over the next few weeks.
All right. Have you modeled in any shift from Bharti and Vodafone? I mean, there is a note from MK that Rima pointed out. 40% is what they're penciling in. If that were to happen, they did scenario analysis. Have you done something of that sort?
No, I can't comment on any such numbers. As I said, I think the first few months also will probably have a bearing, because if someone makes an assumption that X percentage of users were to move out, then of course you will have all those sorts of numbers. But that said, I think the initial months or weeks should be tightly monitored, because all these things also depend on how good the actual handset is when it comes to user experience.
What about tariff increase hopes? Is that going to be pushed back now?
So my base case was that tariff hikes are unlikely to happen in this calendar. And I think going by what we have seen yesterday, that largely remains unchanged, because even though on paper one can always take tariff hikes for the higher end plans and keep offering affordable entry level plans, my sense is that the signal which Jio has also tried to send to the overall market through this move suggests that probably we are still some time away from a broad-based tariff hike.
There were reports about a price hike from Vodafone Idea this morning. Have you heard of any? Have you tracked?
So they have been taking price hikes in a few circles, even the entry-level tariffs. So I think they are being quite selective in terms of taking tariff hikes. But of course, with today's development, I think again the chance that a broad-based price increase happens in the very near term looks slightly remote to me.
Okay, thank you very much, Balaji, for joining in. A few seconds to go before the markets reopen for trade. Is it going to be another record-smashing day for our markets? It's the Fin Nifty expiry, and the first tick on the Nifty pushes us closer to 19,400. The Nifty straight away off the bat opened with a gain of about 50 points plus. The sensex higher by 200 points. The Nifty is now settling with a gain around that 19,380 mark. Mid-caps too have opened higher in step with the large caps. The mid-cap index currently up close to about 0.25%. The big gainers. Top of the list is Bajaj Finance, 4.6% higher. The street likes the Q1 provisional update, the 30% plus growth in the AUM, and the stock is flying in trade. Bajaj Finserv is giving it company. That's the second biggest mover, 2.9% higher. In the auto pack, Hero MotoCorp has got a thumbs up from the market about its X440 bike with Harley Davidson and the pricing. Stock is up close to about 4.5%. Bajaj Auto sold off yesterday, so it's rebounding today. But on the flip side, Eicher Motors is taking it on the chin. The street is worried about market share erosion from Bajaj Auto and Eicher's entry into the premium motorcycle segment. With the brand, the partnerships that they've done, Eicher Motors is currently down close to about 3.6%. Bharti Airtel is also losing in trade. The street is worried about Jio's aggression in the device market and what it signals about tariff increases and possibly the potential loss of their 2G subscriber base too. So Bharti Airtel is under pressure. The Nifty is still holding on to all its gains. In fact, now crossed that 19,400 mark. So there is no stopping this juggernaut, at least as of now. So after piling on 600 points in the last 4 days, Today, it looks like it's going to add a century.
It has almost a century on its back, Rima. 19,400 is here. It's interesting, a bunch of stocks from the broader markets doing well as well, but the large cap names, as you pointed out, have been doing extremely well. Stock of the moment right now clearly is Bajaj Finance, almost 6.5% higher, taking your breath away. The pair trade is in IDFC and IDFC First Bank. There is long IDFC and short IDFC First Bank. So that's playing out. But a bunch of other stocks doing extremely well too. Kansai Nerolac goes ex-bonus today. Was a big gainer yesterday as well. Is up around 6% odd. Genus Power is up in double digits. That's on account of a 2,200 crore order win that we've seen. Avenue Supermarts opened mildly in the green and that has sold off. It's seen a cut of about 0.5 odd%. And finally, we have decent numbers, a 12% organic revenue growth, 16% overall revenue growth in the first quarter coming in for V-Mart Retail as well. So that stock sitting with gains of almost 2% odd. Saxoft is the other one which is doing well. Momentumizer stock, Taneja Aerospace continues its momentum, up around 4.5% on that counter too. So broader markets doing a lot better in terms of the market breadth, even as at the index level, we see a wee bit of underperformance, and that's largely because a lot of the index heavyweights are doing a lot better.
Well, gains attract more gains, Mangalam, right? I mean, so this is super, super strong, right to the word go. 85 points, 19,405, 19,406 is what we have. So, we were talking about 600 points in 4 days, make that 700. With, of course, if the gains hold by at the end of the day. But that's how fast-paced the move has been once we took out the all-time high of 18,887. And by the way, the price activity for the last couple of days has completely turned. I mean, you would expect a dip and then by the dip kind of a price action. But now, intraday you may get a small sort of dip or something like yesterday, for example, but nothing large, right? Intraday or at open, which gives you the opportunity to get in. Instead of trying to buy the dip, you've got to be willing to actually, buy a little higher to kind of be even higher. So it's changed. The texture seems to have changed a little bit. Now, just a few other names. Suzlon is now at 18 rupees. It was up 10% yesterday. Suzlon is coming up with very strong volumes once again. And it's up another 8% this morning. It's the third largest volume traded stock with very large price moves as well. Bajaj Finserv Finance, we highlighted. Finserv is up 5% as well, 14 on Bajaj Finserv. Finance is, of course, up 8%. Genus, we highlighted. JSW Energy is up 3%. JSW Energy was up about 6% yesterday. A fair bit of interest coming through in power and especially JSW Energy over the last couple of days. Angel One is coming up with about a 2.33% gain, 1788 on Angel One. There is Credit Access, which is up 4%. Stocks at about 1,312. Super name and super strong gains this morning. We've got Zensar Tech, which is up 2.5%. Traxon, which is in a way considered as a sort of a proxy for market data, 7% higher on Traxon, 93 on Traxon. Inox Wind is up about 2.25%. You go down the list, volumes start to come off a little bit, but there are a lot of names which are jumping about. 63 Moons, up 5, down 5, up 5 today. So 237 on 63 Moons at this point in time. On the downside, iShares and IDFC First, right? Both of them are down 4% respectively. And there is Bharti, which is down about 2% as well, almost 2%. And L&T Finance, which saw a very sharp move yesterday, is seeing some profit booking. It's down 3%, 132. Stock by close was up about, I think, 6 or 7% in yesterday's session. Well, Sanjay Mukim is our market master of the day. He's strategist head of India Equity Research at JP Morgan. Sanjay, it's a pleasure. Great to have you with us here. Thank you very much for your time. Your latest note is interesting. It's unconventional. You're talking about your travels to rural and semi-urban India and the findings that you have. Maybe a little bit of an unfair question to ask you to directly tell us the findings of what you saw in your travels to what the market is doing, especially on the rural side, Sanjay. Because that's been a bit of a worry, right? That at the lower end, especially on the rural side, things have been weaker, etc. Are you seeing signs that is changing? Go on.
So there are two different answers to your question. Good morning and great to be on. One, of course, is your view or the query on what rural India is doing in the near term, right? Whether you're seeing a revival of demand. Now, we'd argued in our note earlier in March that the conditions for a resurrection of mass market consumer confidence are in place. Jobs have come back post-COVID, wage inflation is higher than it used to be, and consumer confidence is looking better. The debate to have, is whether you will see that revival in demand in a 3-month period or a 6 or a 9-month period. But the note we did today actually looks at India's growth dynamics from a longer horizon. This is not a 3, 6, 9-month research piece, but to look at the fundamental changes or fundamental improvements in the broader consumer pyramid in India. And there are two sort of narratives there. One, income levels are still relatively low and it needs to continue to go up. So there's a potentially lot of upside. But when you do go and visit people and talk to people on the ground, you do realize that over a course of time, there has been significant improvement in the social safety net, in the facilities that are available to the bottom of pyramid people in India. And that underpins productivity growth, that underpins the long-term consumer outlook for India and increases assurance in long-term growth in the economy, right? And therefore, the bias there is to say that, look, if you can find companies that are exposed to it, you should have a long-term positive bias to a B2C domestic-facing consumer set in India. You just need to find the right execution set of companies in India. So on a long term, you always continue to have long bias to Indian stocks, especially those focused to the domestic economy. In the near term, you will have to wait for this revival, which also we think is actually underway.
Sanjay, morning. Just taking a look at Bajaj Finance's numbers, it's quite extraordinary that a company, that an NBFC of this size is growing at 9% AUM quarter on quarter and more than 30% on a year-on-year basis. And of course, the stock is getting rewarded today. Is this something that could be replicated by the other big banks and NBFCs in India? Maybe are we underestimating the kind of growth, the credit growth, the AUM size increase, the disbursements growth that India could see, these large banks may clock in the next 2 years?
Without referring to a single company or a stock here, our view is that system loan growth in India will actually decelerate in the coming few quarters for two big reasons. One, nominal GDP growth last year was very strong and you had inflation and WPI was high, which drove credit demand partially. And that phenomena is going to go away in the coming quarters. WPI is already negative as it is. And nominal GDP comes in at the 10-11% mark, which is the current base case today. But the second constraint that the financial system in aggregate is likely to face is a lack of deposits. Right? There is only about 10% deposit growth in the system. People have had surplus liquidity carried over for a variety of reasons, which they have redeployed into lending. But that phenomena can persist for only so much longer. So for the entire system, the credit growth momentum is likely to moderate into the low double digits to my mind. What you need to pick out is which particular financial company has the capacity and the willingness to grow faster than system. Now, historically, you've seen that the private sector banks have always gained market share and done 6 to 7% higher than system loan growth. The challenge now is that the private sector is more than 40% of total system. It's no longer a smaller component. And the PSU banks are also competitive for a variety of reasons. So it will be an interesting next few quarters to figure out how these market share changes happen and whether a large number of financials can continue to outgrow the system, which theoretically is challenging.
Right. Sanjay, just before we speak to you about your sectoral preferences, keeping an eye out on a couple of these stocks where there would be pre-positioning ahead of their pre-quarter update. So Titan is up around 1.5%. Godrej Consumer is the other one which is doing well. And we're seeing some performance rise on names like Trent, retail and consumer discretionary, Jubilant Food, which was one of Sudarshan's calls, doing extremely well as well at the high point of trade. Sanjay, you were a naysayer on IT for the longest time, and that's worked out extremely well for you. The Nasdaq is up 32%. Everyone's talking about artificial intelligence and that reducing the cost for a lot of these IT players and impacting their margins. Do you think the time to buy IT has just been delayed further?
Yes, so we are in the camp that it's a bit too early to look at Indian IT companies on the basis of their correction or on the basis of a valuation anchor or any of that sort, because we expect many of these companies to come in with numbers weaker than expectation in this or the next quarter. And some of the mid caps or smaller names are also trading at very elevated valuations as well. So you're likely to see earnings misses, downgrades, and valuations again are not at supportive levels to our mind. There may be these technicals, people keep talking to me as well, oh, Nasdaq's going up and tech's rallying and all, but I think don't matter. If companies miss earnings, then the stocks will remain under pressure to our mind. Now, at some point, you may be able to make a call that, the demand momentum globally is bottoming and there are possible signs of a revival in IT demand. I think that it is too early to make that call just yet.
Got that. Although, you have a very broad perspective, Sanjay, because of your global coverage as well. The expected weakening in global demand, especially US demand, is just not happening, right? And people have been waiting for it for at least a year. Rates have gone up 500 basis points and data is just coming in strong. Maybe once in a while you get something which indicates some softening, but nothing large. By and large, still strong. So in that light, Sanjay, I mean, how does that, do we need to reassess it's, as we get into the second half of this year about what we thought this year would be like at the beginning, especially with the export-oriented sectors like IT?
So yes and no. So we are seeing feedback from companies that consume IT services that their approach to spending growth has turned very conservative, right? Now there are two sort of narratives. One is what is happening to the economy and whether the consumer is slowing down. There are signs that there is some slowdown, maybe not as rapidly as you would have expected, but the direction is softening a little bit. On growth, on consumption and so on. But the feedback from people, the large companies, the BFSI, retail, is still very cautious. So we still expect that the IT universe growth of demand will come in weaker than people's current forecasts, right? So that remains a concern for us. The bigger question to your point is, look, if the economies don't slow fast enough, then the Fed will not have the reason or opportunity to cut rates and reverse its QT, in which case there is a significant gap in equity valuations. If the current liquidity tightness continues and liquidity withdrawal continues and rates remain high, equities are mispriced, and then this rally may turn out to have been very premature.
All right, got that. Thank you very much, Sanjay. Appreciate you joining in, and it's a pleasure having you with us here, as always. Thanks indeed. The big story, of course, is the IDFC Bank merger, long-awaited one, the merger ratio, etc., being announced. Stocks reacting. IDFC First, by the way, of course, was lower, and IDFC has given up gains. It made a high of about 115, and I think it's now absolutely flat. I'm talking about IDFC Limited as well, which has given up gains. Now, IDFC, we have the management joining us to take forward that conversation. Mr. Vaidyanathan is Managing Director and Chief Executive Officer at IDFC First Bank. Mr. Vaidyanathan, good morning. Great to have you with us here on the program here at CNBC-TV18. And congratulations. Long awaited, finally done. Could you tell us what are the next steps? I mean, as we as we look forward for the consummation of this merger, what are the next steps?
First of all, yes, we are all very happy that we are over and done with this, and there is a very clean corporate structure, and now we can look forward to building the bank moving forward. With regard to your question about what is the next step, frankly, we got to go through the process. We got to take approval from the regulator. We got to go through NCLT, go to the shareholder for approval. But we believe all that will follow will get done hopefully in 9 to 12 months.
Okay. Well, Mr. Vaidyanathan, good morning. And again, as you said, congratulations on simplifying a structure. But long overdue, isn't it? What went into all this thinking? Why the delay and what were the considerations?
Well, the main consideration is to how to find a fair value for all shareholders. And, there was a certain holding company discount in IDFC Limited. IDFC Limited holds about 266 crore shares of the bank, and they have issued 160 crore shares. So the intrinsic value is about 1.66 shares of IDFC Bank for every shareholder of IDFC Limited. On the other hand, there was a market price On the other hand, there's a value for IDFC Bank. There's a comparable value. We'll go through all these processes. So you've got to find a statutorily, a process that is accepted statutorily and in compliance. So all the process took some time.
Okay. Well, there was one shareholder complaining to me on a message that the 6.1% holding company discount would mean that the government gets 6.1% less. They would have got, 2.62 crore shares now of IDFC Bank, whereas they should have got perhaps more than that, 6% more than that. No complaint from the government on this, was there?
No. So first of all, to correct your numbers, they are getting 1.55 shares per share of IDFC Limited. Against the intrinsic holding 1.66. So but to your question about government, well, we respect the holding of government, and there is also other shareholders. There are also minority shareholders. That's why the process works in such a way that's fair for everybody and all shareholders. And to the point of that's how let me leave it at that. And by the way, government has also holding an IDFC Bank. Of to the extent of about 4%, about 16% there. Government is broadly neutral. Just to put it like that, broadly neutral. Because
I'll just say, I think I'm splitting hairs over here. They would have got 43 crore shares without the 6% discount. Now they get 40 crore shares. Anyway, I was just wanting to know if the government said anything. Okay, now,
and they're on both sides, not the mother.
Okay. Anything you heard about the MSCI inclusion? I think Nuvama has put out a note. That will mean much easier ability to raise capital. But any clarity on that?
Well, we consider it our privilege. I think it's a huge moment of our lives. If an event like that happens, we are told we are a few percentage points away from getting to that landmark. And because once you enter the MSCI index, there is a certain amount of flow of dollars that comes in the stock. In the last research report from Nuvama I read was that about $170 to $180 million of purchases will happen in our bank once that happens. Now, I'm not an expert at all these things, but I'm just saying that it'll be fantastic for the bank to get that kind of stature to be part of MSCI index, an arrival of the bank, let me say.
Okay. Now, how does life become easier, or how does it change for the management? You don't have a big shareholder now. Does that mean more elbow room?
Well, in any case, if one entity has 40%, if you've got to have a resolution for, say, raising capital, you need specific support of that block of shareholder. And by the way, we had a good relationship with that entity. But nevertheless, you still need those approvals. You need resolutions to be cleared, and you need one entity holding that kind of a voting block. With this process, what will happen is that becomes, the shares get distributed IDFC Limited. It's very diversified, public shareholding, institutional shareholding. Think of it like that. So you're able to raise capital from time to time, just from the market, like how ICICI or HDFC, they all raise from time to time, and they keep going. It's good, in that sense.
Congratulations, sir. Rima here. Just want to get a sense about the capital position. Will you be getting any capital from IDFC? What will be the cash on the bank's book now post-merger? How does your capital adequacy change? And post the merger, you even spoke about it's becoming easier for you to raise money. Would you be looking to tap the markets and raise some money? Just give us the overview on the capital and the cash.
Yes, that's an important point, by the way, because apart of, we're paying this ratio of 1.55, but you should also remember that IDFC Limited has approximately, give or take, about 600 crores of cash, which we're expecting to come as part of the merger into the bank, into the merged entity. Now, to that extent, the capital of the bank goes up as part of the merger, and that is already factored in that price. So, in that sense, it's to specific, by the way, on your question on capital adequacy, our capital adequacy is now. We just raised some Tier 2 capital last week, by the way, of 1,500 crores. Our capital adequacy has become about 17.4%. With this, we'll get some more capital. And of course, raising capital becomes easy. We do expect, by the way, by the end of this year to raise some more capital, about 2,000 crores. Okay.
How much would that capital be?
2,000.
You were talking about 2,000 crores.
All right. Just wanted to understand post this merger. I presume it would take about, what, 9 to 12 months, given the sort of approvals that are required?
Correct.
Right. So post this, what does the combined, growth or the growth for the combined entity look like in terms of business and then asset quality? How does that go from here?
Nothing called combined entities. There's a bank only because there's no operating business in the limited. But to your question right now, as you know, if you've seen the numbers the last years, we've been growing about 25% per year on the loan book for a while. We guide for 22-24, but this turns out to be 25. So that story will play out. We feel that for quite a while. We feel very confident, and we'll discuss reasons if we have time. On the deposit side is what we are really hitting the ball out of the park. Our bank is enjoying a really good brand image. We are getting deposits over 45% year-on-year growth until last quarter's numbers. This number is not out. So business is looking very good, actually.
No, your deposits have grown, I must say, almost savagely. 55%, I think, when you last reported. But is it becoming a little expensive, Mr. Vaidyanathan? After all, the big HDFC bank is borrowing, and that's pushing up costs for the entire sector. So how much have the cost of deposits gone up for you, if at all? And how are you likely to do, therefore, in terms of NIMs? Is the best behind you?
No. First of all, the best is not behind us. I think we'll be...
for the year. Not in terms of a decade.
No. Even for the year, we feel that comfortable that we sustain for the rest of the year our 6.41%. But to your more specific question about how the cost of deposits have moved, I'm actually very happy. I don't know how, but I know the bank has got that sort of a stage. We brought down the rates of deposits from 7% to 4%, like that. 300 basis point drop. I don't think anybody's done that kind of a cut in a long time for up to 10 lakhs. We are still there at 10%, but our deposits still surging at 44%. So just think about it. You drop rate by 300 basis point, deposit up 44%. So it's working. That's all I can say.
Yes. Mr. Vaidyanathan, in the earlier answer, you did mention sort of the diversified shareholding, right? No promoter like ICICI, HDFC, etc. And you've made that point earlier. in terms of sort of businesses that you would like to grow on the lines of, those are two institutions you admire. Just give us a slightly, say, a 2-3 year kind of a vision. How would you like to grow, and what would you like to get to in terms of size of assets, size of business?
See, if you grow a loan book by 25% for 3 years, what the book like, how the maths work. It look pretty good. And deposits we expect to keep, growing, but I'm in silent period. Please don't push me on that line. I have to be very careful here. But with regard to the previous comment you made about ICS, HDFC, these are hallowed institutions which our country is proud of, and of course the other good names as well. So once there is no promoter shareholding, there's no promoter. If you think of global corporations like Bank of America, JP Morgan Chase, there's no promoter. They just keep go on for centuries. So we should think of this like that, and
Okay. No, I agree. That certainly gives you all much more elbow room as a management. Just a final question, because I'm being warned we're out of time. Your risk-weighted assets are also high. And if you grow at 25%, the Reserve Bank itself has shot out a letter to everyone about unsecured loans. Would you worry that your lending is a tad riskier?
Not at all. Not at all. You should see what do you call risky. Basically, you see end of the day, your gross NPA of retail is 1.6%, net NPA is 0.6%, SMA is 1%, and just mind it, 1% SMA is free NPA stage. Really big. And it's been like that for 10 years now. So things are very fantastic. We are very careful, we're very watchful. We watch it like a hawk, that we should never have to report NPA more than 2%.
Okay. No, it is just, as the governor said when he spoke to the directors of all the banks, mistakes are made in good times. So, I agree that the entire banking sector is moving.
No, absolutely. He's right. And we greatly respect that point of view. We really do. And in fact, after his comment, we came back and once again looked into our books, once again made a presentation to the board, and we poured away everything. So we respect that, and we'll be very watchful. We are very careful.
Okay. So you expect 25% growth for how many years now? For that foreseeable 3-4 years? I'm asking you long term. I'm not asking you for an immediate guidance.
Okay, yeah. We should talk long only because I can't comment in short. But we guide only 22-24, and if you get there in the zone, you should be happy. But yeah, I mean, this is, you see even big banks like ICICI and HDFC growing at 20% for a start, for early stage bank. These are not really big numbers. They're very moderate.
Yeah, I agree. The base is helpful. Thank you very much, Mr. Vaidyanathan. We'll invite you for a more detailed conversation. There are other guests lined up for today. Many congratulations, of course, for this long-awaited reverse merger.
Well, interesting conversation, Mr. Vaidyanathan. Thank you very much. And he was talking about those hallowed institutions, ICICI, HDFC. He was part of
ICICI. ICICI has provided leaders across
the board. So
absolutely, and even now Sudipto Ray has joined L&T Finance. So clearly they are providing. But I mean, you have to congratulate Vaidyanathan himself. I mean, when he started Capital First as an NBFC, and then to go on first get into IDFC and then do the reverse merger, I think it's personally a very satisfactory and impressive.
And
job.
Always extremely excited about the business, right? I mean, what the potential, etc. is. So great to finally see that merger going through. Not going through, it'll take time, but of course, the first steps being taken. We'll take a quick commercial break here. Up next, we'll be joined by Ameera Shah, promoter and managing director at Metropolis Healthcare, to discuss their growth outlook. Later in our special segment, Charting Trends, Rahul Sharma of JM Financial Services will talk us through some specific charts, Nifty, Bank Nifty, the NSE 500, and a few others. Stay with us.
Welcome back. The mid-cap index has now dipped into the red. Even the Nifty, which has scaled the summit of 19,400, has eased from the top. So some profit booking is setting in. The Nifty is now down to levels of 19,350 in the green, but the gains are quite slim, and the mid-cap index is currently in the red. The advanced decline ratio, for now at least, is holding up in favor of the gaining side. But we've got the management of Metropolis waiting to chat with us. The stock in the last 1 year hasn't given any return. It's only up close to about 3%. The street is concerned about the increased competition in the diagnostic space. But has that competitive intensity eased a bit? What's the current landscape right now? Because we haven't seen too many new entrants in the diagnostic space. We are now joined by the promoter and the managing director of Metropolis Healthcare on the show now to talk about the way forward. We've got Ms. Ameera Shah with us. Thank you very much for joining in. Can you talk about how competition is? Has the discounting eased, at least from the new tech players? Just tell us, competition right now and the way forward, according to you.
Hi, good morning. So I think, there's been a lot of confusion around the diagnostics industry in this past year. And I think people have assumed that, revenues or profits have been impacted because of competitive intensity. But actually, in reality, the reason we've seen 22-23 obviously be a little lower than the year before that has been more because COVID has come off. And because of that, it impacted the revenues and the profits of all organizations in the industry. Actually, if you look at the non-COVID, if you look at our core business in FY 22-23, it grew at about 15%. Of which 13% was volume growth and 2% was a revenue per patient growth. So actually, which is very similar to what it was pre-COVID. So competition has come in, of course, in a bigger way. But frankly, in our industry, we've seen competition for the last 10 years. It's not something very unusual. We have seen online players. We've seen some corporate entrants as well. Having said that, in the industry, we have to realize that diagnostics is not one big industry. It's actually nuanced sub-segments of the industry. So it really depends on where you play. Metropolis really has spent most of our time in the illness sector, and that too in the more critical illnesses. And therefore, when doctors and patients are coming to Metropolis, they're coming because they truly need good quality results where they're very sure of accuracy. The moat around the business is more around the trust and the credibility which the brand enjoys, which frankly takes time to build, is difficult for any new entrant to build overnight because it requires very fundamental expertise. So we have seen competition come in. Metropolis has not seen any large impact because of that. We are continuing to grow well in our core business, and we expect to do the same next year.
Have you undertaken any price hikes in any of your tests?
We have actually in the last 2-3 months, we've taken some price hikes in about some variety of the tests. So actually our normal way of doing price hikes is never at one time, all tests at all locations, but we usually do different locations different test categories at different times of the year. So we just did one as of April 1st, more in the specialized segment, a few hundred tests, and marginal increase is about 4-5%. So I think overall, I think we're continuing to see that price increases are possible. We are continuing to see that even though competitive intensity did come in and discounts did go up, we are starting to see those discounts ease because we are also seeing that competition is understanding that discounting doesn't get you very far in healthcare.
Right.
You really have to build expertise.
Patients are one end of the spectrum. The other important stakeholder are your vendors and your franchise partners, etc. All competitors have perhaps also understood that for them to grow, they have to expand their network. In that situation, how's the bargaining power of franchisees and partners been? I mean, has there been any change in revenue share? Are they pushing for a higher share of their revenue, given they have other options now as well, poaching in this space?
So actually, we have to understand the role of a franchise, at least for Metropolis, is more of a service provider where they actually collect the sample when our patient walks into that center. If it is a B2C franchise center, and also we also have B2B franchise centers where they only pick up samples from hospitals and labs. But when a patient walks in, the demand generation is done by Metropolis. The service fulfillment is done by the franchise. So even when competition comes in and there's always an attempt to poach your franchise partners from you, we usually find that the best quality, the most productive franchise partners never leave because they understand that the business is being generated by the brand and not by them. And therefore, that bargaining power that you're referring to doesn't actually become much stronger in the hands of the franchise, even when competition does come.
Amira, hi, good morning. Prashant here. Two questions. One, so we should expect 15% growth in FY24 as well. You said similar growth should be maintained. That is point one. And second, when we speak with companies like Dr. Lal, etc., they say that bundled tests, right, many tests together, they become very popular. And that kind of also is a price advantage for consumers, so that's why they opt for it. So are you seeing a similar trend?
We certainly are seeing bundle tests go up. I think it's more not only because of a change of consumer mindset, but also because organizations like us are giving opportunities to consumers to say that, look, would you like to create a bundle package and do more tests since you're giving your blood anyway. Having said that, this is not hitting the profitability of organizations. Actually, it is contributing to the bottom line as well. So I don't see this as a negative way of either reducing the RPP or by reducing the EBITDA margin in any way. On your question as far as the outlook goes, last year, as I mentioned, on the core business, which is keeping aside COVID, keeping aside acquisitions, keeping aside government contracts, any of those, we saw 15% growth. Going forward, again, I think the 12 to 15% growth on the core business is very doable. As a mixture of volume and price increase. But that obviously does not COVID and acquisitions and government contracts.
So, sorry, overall business revenue growth would be, Amira, 12 to 15%?
No, I said that would be for the core business.
The core. So what would be the,
COVID will still impact a little bit because this year in 22-23, we still saw some COVID revenues, which are obviously not continuing into 23-24. So there are some adjustments because of other ecosystem areas, but otherwise in the core business, we do believe 12 to 15 is possible.
And just one more number, what percentage of total sales are through these bundled sort of tests now?
For us, it's about 15%.
And that is growing rapidly?
That is growing well. And like I said, it continues to be profitable for us at the bottom.
But it would, just as a layperson, bundling many tests together as against paying for each individually, I'm assuming that there would be some trade-off, right, in terms of pricing as a business.
Of course there is. There is certainly a benefit for the consumer when they do bundled tests. But what we have to remember, if you look at the P&L of diagnostic companies, the servicing cost of a customer is as significant as the material cost in doing a test. So actually, when you're adding multiple more tests, you are incurring obviously a higher material cost, but that additional incremental revenue that it's giving you does help you on the bottom line. as well. So overall, we find this to be very profitable, for all the industry organizations, assuming that you're getting them still at fair prices, right? This is not for any bundle package. There are companies who are offering 100 tests at, some 700,000-800,000 rupees. Obviously, that's not the same result for them. We are selling more premium wellness, premium bundle package, which means a higher quality, higher service. Patients and consumers are willing to pay a slightly higher price because they know they're getting a far better quality report. So overall, it still makes sense for us.
Okay. Very quickly, just one last question. You had plans to open 30 additional labs this year and 600 to 800 collection centers. Are you on track? And considering that there is going to be a more focus on opening your centers in Tier 2, will it be margin dilutives? Could margins in FY24 be under pressure on account of this?
So actually, if you look at it in FY22-23, we opened approximately 15 labs. We are in a process of an accelerated lab expansion from FY21 till FY25. Despite opening 30 labs 15 labs in FY22-23, our margin dilution was only 1.5% compared to pre-COVID, where we were at 27% EBITDA. We reported a 25.5% EBITDA in 22-23, and that was primarily because of this accelerated lab expansion. We will continue that in FY23-24 and 24-25 by opening 30 labs in each year. But we are aiming to keep our margins consistent at 25.5% for the next couple of years. And at the end of the lab expansion, which is after FY25, once with this margin dilution is not happening anymore because of the accelerated lab expansion, we can then hope to see margins expanding. Yeah.
Just wanted to know your target share coming in from premium wellness, because that had increased to somewhere around mid-teens. What do you think it stabilizes at? What's your aspiration there? And in terms of new network as well, that contributed around 3 to 5% of your revenues. What's the target there?
So currently, premium wellness is about 15% of our overall revenues, and we're hoping to take it closer to 20. You're right, the new expansion contributed about 3% of the overall revenue. And we expect that will move up closer to 4 to 5% in the next couple of years as we accelerate the lab expansion as well as the collection center expansion. We are very much on track to open 30 new labs in FY23-24 as well as the collection center network. In fact, I think we're going to do much higher than the collection center network, much higher than what we had projected, which was originally about 600 centers a year. We're actually aiming to do closer to 800 centers every year. So I think we're certainly on track. We will continue to maintain margins despite the accelerated expansion. And we believe that this will bring good growth to the organization in the years to come.
By the way, Mangalam, there was a report that Google is their AI, I don't know what it's called. They basically a retinal scan. They're working with the Sankara Nethralaya, which is one of the top hospitals in Chennai, eye hospitals. And they're doing so a retinal scan will tell you the probability of a cardiovascular event a year in the next 1 year. I mean,
irrespective, you have to go to the doctor. I figured this because a lot of times...
No, I'm saying from a diagnosis perspective. I mean, you don't have to... Anyway, I mean, it's a completely new way of doing things. But you're right, Mangalam. I mean, it doesn't replace the doctor. I don't know. Amira, you want to say something?
wants to come in on this.
Yeah, I was just saying, look, I think it's really exciting with all the innovation and technology. Lots of changes in healthcare. But we have to remember, any consumer, even if you do a scan and you feel, okay, I may have an... It's great for the awareness, but you will finally go back to a lab or to a radiologist to confirm it before you take any actions.
Great speaking with you, Amira. Appreciate you joining in, and good luck and good chat as always here on CNBC-TV18. Well, Rahul Sharma is joining us, Director and Head of Technical and Derivatives at JM Financial Services. Rahul, good to have you with us here. Sorry to have kept you waiting. By the way, look at the market. The Nifty is basically climbed down to being absolutely flat. We were up 80 points, and you got 8 points left now, 19,332. Just a one-way kind of a move lower, gentle slope lower. Rahul, you've sent across a couple of charts, and we'll put them up. I want to start with the NSE 500 first. Not the Nifty or the Bank Nifty, the NSE 500. Which you're calling is the breakout of the year. Just talk to us about what you're seeing.
Yeah, so if we go slightly back around when in March, April, the markets were turning around, it was the Nifty 500 index which did give the breakout first, and then it was followed by Bank Nifty and the Nifty index. Now, this time around, what is happening is structurally there is a very good, strong ascending triangle pattern that has been formed on the monthly charts. Last week, we saw a phenomenal monthly close, a very strong weekly close as well. And mind you, this is the Nifty 500 index, which is more of a broad market indicator, which translates into at least 10 to 15% upside in the coming 3 to 4 months' time, which could mean a lot more upside for the individual stocks as well. So I think this bull run in terms of Nifty has just begun. We're just 3% away from the previous all-time high, around 19,500 odd, 19,350. There is a bit of resistance for the short term as well, but I think dips, if any, are to be bought into. And considering the market breadth, considering the way FIs have gone aggressively long on the index futures, considering the way client positions or retail positions are stuck on the short side, I think there is another swivel trade which can bring us possibly to the 20,000 mark in this series itself, and 21,000 by the end of this year. So both from not only from an internal strength perspective, but also from a derivatives positioning perspective, this indicates that this is a second leg of the rally which is beginning, and we are in for a structural upside from here.
Rahul, morning. It looks like the sleeping giant Reliance has woken up over the last few days. What are the charts telling you?
Yeah, so Reliance has been, an underperformer for most part of the time. In fact, the 22, there are twin tops in the 22 calendar year. Post that, we've seen multiple times the ratio. If you do a relative comparison of Reliance divided by Nifty, the ratio chart has reversed from these areas multiple times, 4 to be precise, in the last 18 odd months. So we believe this time also it will not be any different. So a simple catch up to the Nifty 50 would mean Reliance is back to somewhere around 2,800, 2,850. And if that does translate into an outperformance, we could very well be headed north of 3,000 on the upside. So, the risk reward still continues to be favorable for this giant. And we believe there is, more upside to be had in the coming few months. So structurally, we feel 3,000 is very much on the cards by the end of this year. One can look to accumulate around these levels, have a stop loss at 2,350, and we feel that this is one of those index components which is yet to fire.
LTIM and Tech Mahindra from the IT space, you like these two, Rahul?
Yeah, so IT index has had negative returns if we simply do a comparison from December till date, from December 22 till date. So only two sectors which fall under this category. One is the metals, which has not performed, and second is the IT, which has been negative. So we feel IT has formed a base. There is a double bottom on the IT index around the 26,100 mark. And now finally, after the base confirmation is done, we feel that there is a good 10 to 12% upside to be had in the IT index in the medium term, and maybe more, towards the end of the year. So clearly, all the IT names like TCS, LTI, Mindtree, Tech Mahindra, for that matter, all of them have structures which are elongated consolidation structures. And breakout from these would mean a quick upside of around 20-25% on the mid-cap IT names and around 10 to 15% on the large-cap IT names. So TCS is something that we like. I think 3,600 odd should be tested anytime soon. On the mid-cap, LTI Mindtree is one which can be a high beta play. We've seen this stock deliver the kind of momentum that traders especially like on the derivative side. So around 20% upside is possible in LTI Mindtree. And as far as Tech Mahindra is concerned, the percentage upside is even more because technically the projected targets for the current setup are coming close to 1,500. So these are more like 3 to 6 month kind of setups where we feel we are in for a structural upside from here. So IT in particular looks good, especially from a risk reward perspective. And lastly, coming to metals. So metals has been sort of an underperformer. Something that we particularly like, JSW Steel setup is quite attractive at this point in time. There are 3 weeks, since last 3 weeks we've been trying to break out from the 800 mark. I think as and when it happens, then we should be in for a quick 10-20% upside in JSW Steel as well.
Okay, Rahul, thank you very much for joining in. So Rahul saying buy the dips, 20,000 is possible on the Nifty in this series and 21,000 by the end of the year. And he's betting on stocks like Reliance, IT names like TCS, LTI, Mindtree, Tech Mahindra, and even JSW Steel. That's the new debut today, HMA Agro. It's a big retailer of buffalo meat. Exports, 90% of their revenues come in from exports, and the stock has seen a opening in the green, currently up close to about 12%. Issue price was 585, listed at 625, but the subscription on it was not very high, just about 1.6 times, but it's opened up pretty strong considering the market itself is flat. But the other big news today, Harley Davidson has launched the X440 in India. The bike has been co-developed by Hero Moto exclusively for the Indian market. On the heels of the launch, Parikshit caught up with Harley Davidson CEO and Pawan Munjal, the chairman of Hero Moto Corp. Listen in to that interview.
Extremely important. At the same time, I have to say I'm also extremely confident about the product, about the success of it, and about the customers that we plan to get on board, and also about the customer delight that we plan to give to our customers. So all that Harley has been doing across the globe for their customers is now only going to get multiplied here through this co-created, co-developed product for Harley Davidson in India for India.
Right. If I can ask you, how have the two brands collaborated on this product? Has the design come from Harley Davidson? Has the engine development come from Hero MotoCorp? Give us the backstory.
Well, it's really the companies that collaborated rather than the brands. Hero is Hero, Harley Davidson is Harley Davidson, and it's been a true co-creation. When Dr. Munjal and I spoke in 2020 to think about a partnership, we said, well, we should be creating a product together. So it's been a product that has been designed, that's been engineered, that has a look, sound, and feel that is very typical Harley, which is critical to us. As soon as your product carries our brand name, it needs to be a special Harley. But combining that with the expertise from an engineering point of view, from a manufacturing point in India, understanding the Indian customer is very critical. So, it was a close collaboration from the beginning, and I think the product will speak for itself.
Give us a sense of how this partnership has been for Harley Davidson. You exited the India market but handed over the reins in a way to Hero MotoCorp. X440, how important is it for Harley Davidson to drive sales in the India market?
Didn't really exit. We transitioned to a new business model, and that was a partnership with a partner that is truly a true expert in the Indian market. That was important for me. We have a global brand, we have global product, we want to be present in India. There was never any doubt in my mind. It was a little bit positioned that way, but it was very clear that we would not leave the market, but come back with a much stronger partnership that could produce a product that we probably couldn't have developed and certainly not manufactured in India on our own. So it's a very important product. It plays in the premium segment. It's part of our long-term strategy to selectively expand into areas that we have not traditionally been in. And doing that by having a partner that has that expertise has been a great experience, and we're very excited and think that this product has a long way to go and a big potential.
Right.
Let me add that that this has been a very, very successful and very smooth transition for Harley products to be sold by Hero through the Harley dealerships that they already established here.
Right. The 440 segment. It seems there's a lot of competition now, Mr. Munjal, in the 400cc segment. You've got Bajaj Auto and Triumph launching two motorcycles in the 400cc segment. You already have the Royal Enfield, which is present here. Why is this segment so exciting?
More the merrier. To start with, somebody earlier asked that why do you want to play in a segment where there are so many people, just like you are wanting to know why the 440 segment. For me, and I'm sure for Jochen as well, no fun in being by yourselves and having a monopoly in these times. When there is competition, when there are a number of players in the same segment, in the same field, we all bring out the best. And best for the customer, which is what we're all wanting to do.
Right. How do you expect this to contribute to Hero MotoCorp sales, Mr. Munjal? Hero MotoCorp has been the leader in the commuter segment for years now. Premiumization is the area which is seeing growth. How do you expect this to contribute to your monthly numbers going forward?
All I want to say is the Harley-Davidson brand that we are launching here now through the Export 40 is definitely going to be right on top of our premiumization strategy. And we do have a huge strategy which has already been outlined by our CEO Niranjan Gupta to all of you. We have a number of launches planned in the premium segment starting recently.
Okay, interesting conversation there. We'll keep playing snippets through the day, get into a break. We'll come back and put the spotlight on some stocks which are on the move. Welcome back. Markets flat now, so all the morning gains have been given up, but there are a few stocks on the move. One of them is Genus Power Infra. Surbi joins in with the latest order win. Surbi.
Hi Rima, so we don't talk about this stock often. Now it has recently won a 2,200 crore order. This is for installing and commissioning of 27.69 lakh smart prepaid meters. Now management says that the order win provides a strong revenue visibility and it also signals a strong start to the order inflow for FY24. For FY23 itself, they had an order book of 1696 crores. The financials were not too bad as well. The revenues were up 18%, the EBITDA was up 32%, and they had a margin of nearly 10% versus 9% in the previous year. The stock has actually gained 46% in the last 1 month itself. So a lot of optimism about the smart meters that are coming in.
Thank you very much for that. But the big mover of the day, the stock of the day, is undoubtedly Bajaj Finance. Very strong provisional Q1 numbers reported. Abhishek is here with the details.
Well, it looks like, the biggest NBFC in terms of consumer finance is back with a bang, and how. Look at the new loans. They are up 34% YOY and about 30.8% sequentially. Sequentially, it's perhaps one of the best growth that you are seeing in last 7 quarters. And Q1 versus Q4 is typically not such a high loan growth period, but this time around, it's clocked more than 30% growth over there. The customer base is up 21% YOY and about 5.5% sequentially. The AUM growth on a YY basis at 32.4% is perhaps the best that you are seeing in last 14 quarters, and sequential growth of 9.2% is perhaps the best in last 16 quarters. Average ticket size, that's up only 9.4% YY and about 3.4% sequentially. Deposit momentum was strong, growing at more than 46% YY and about 11.8% sequentially. The liquidity in the balance sheet remains high at about 12,700 crore, which is up 7.2% quarter on quarter, and the cross-sell ratio, that's also improved to about 8.3%, which is perhaps the best that you are seeing in last 6 quarters. So a big thumbs up given by Street on the numbers given out by Bajaj Finance. Back to you.
Thank you very much for that. And now the stock is just 2.5% away from its all-time high level. While the stock is trading at a fresh 52-week high, the all-time high level on Bajaj Finance was 8050, hit in October of 2021, and the stock is now inching towards that. CLSA has pegged the target price at 9,000 on Bajaj Finance. With that, it's time for a break. On the other side, our special segment, State of the Economy. Lata will join in, and she'll be joined by Pranjal Bhandari, Chief India Economist, HSBC, and Samiran Chakraborty, Chief India Economist, Citibank, to discuss India's growth outlook.